China wants the gold trade to move toward the physical side of it. They've actually announced that they had 4 or 5 major banks tell all their customers as of July 24th, there will be no more rehypothecation of gold on mainland China. No more futures trading, no more paper trading. And I think part of that is a result of what happened back in February and March, where there was massive short sales that turned out to be naked, and they were well above the position limits.
Well, I just want your thoughts, if we could, on what you believe has happened to the Fort Knox inquiry, where the United States President Donald Trump and Elon Musk were planning a visit some time ago. I believe Donald Trump stated that he would gain entry in 24 hours of the request and instigate an audit. Now, nothing seemingly has happened since. So I know what I find really surprising is that, and you mentioned a figure of 8,300 metric tons. So if that was confirmed to be held in storage, then this would be super positive for the US. But that hasn't happened. Again, your thoughts?
Now, well, first off, they could do an audit and they could find 8,300 metric tons. I don't think that's the case. Well, let's say they found 8,300 metric tons. Then the question is, who owns that metal? Has that metal been rehypothecated? Has it been leased out? Who's the true owner? I mean, we know for a fact, up until 2004, 5, 6, central banks all over the world were leasing gold out, and they were doing that to, look at the Bank of England. They sold all their gold, or not all of it, but roughly half of their gold. They leased them out thinking they were going to get income for it. And the question is, did they or have they gotten that gold back? It has that trade unwound. So first off, there's not been an audit since 1956.
Yep.
I mean, that is so highly suspect. And they say, well, we can't do an audit. It's too expensive. It'll cost $20 million a year. Well, $20 million a year is nothing. It's not even salt and pepper on top of a dinner. $20 million. I mean, they built bridges for more than $20 million that go to nowhere. So it can't be the cost. It can't be the expense. And again, common sense tells you if they're not doing an audit, there's probably something behind. What? I'm not sure. I'm not going to speculate on it. But if they've not audited in my lifetime, I wasn't born in 1956. If they've not done an audit in my lifetime, something smells bad. There's one other thing to that. Let me just add to that.
Yep.
Even if we did have an audit, would the rest of the world believe it? Would the Chinese believe it? Would the Russians believe it? I mean, it would have to be a completely transparent audit by an independent entity, maybe a group of worldwide auditors that can't be, pushed on from, U.S. auditors being pushed on by either the administration or whoever. And I think this is going to happen because when the BRICS currency does go live, I've always believed that here in the United States, we're going to hear, okay, here's our currency. We're showing you the backing. We're showing you the reserves to it. And here's the audit to it. Now you show us yours. And that's going to be a big problem, I think.
Am I right? So, yeah, I'm not quite sure if you know what Bill said there, but China will come out all guns firing and with audits and everything else. And I understand where you mentioned right at the beginning, China having 40,000 tons would not surprise me at all. I mean, even Alistair McLeod has mentioned just on the back of an envelope 35,000 tons. So there's now we've got two people and really know what they're doing, and Alistair and Bill, talking the same numbers. So, it's going to be very interesting days. And, look, I've always thought a gold standard has to be implemented for any of this to be fixed up, but it's going to be the in-between days are going to be very hard to deal with. Bill, China has now in place gold clearing systems with vaults in Hong Kong and Saudi Arabia, and rumours about several places in Southeast Asia. It seems that they are working towards having their own currency, which would be backed by gold, so trading can continue without the US dollar involved. I know we've covered a little bit of that, but Bill, your thoughts?
Yeah, no, 100% correct. China is trying to wall themselves off. The Brits are trying to wall themselves off from any collapse of the dollar. They want to be off the railroad tracks. They want to be on their own railroad track. China wants the gold trade to move toward the physical side of it. They've actually announced, I think it was a week, 10 days ago, they had 4 or 5 major banks tell all their customers, as of July 24th, there will be no more rehypothecation of gold on mainland China. No more futures trading, no more paper trading. And I think part of that is a result of what happened back in February and March, where there was massive short sales that turned out to be naked, and they were well above the position limits. Now, that happens all the time in the US, and the CFTC never does anything. But China basically shut those traders down, and now they've gone one step further. They're closing that market. So they don't want paper trading. They want physical trading to determine the price. In other words, the dog wags its tail as opposed to the tail wagging the dog.
When we talk about a country's GDP, unfortunately, it includes government spending, which makes no sense to me, because government income either comes from taxation, which is derived from private profits, or by borrowing, which again, an interest rate is attached. Now, apparently, the debt to GDP of the G7 nations in the 1970s, just after the decade after we went off the gold standard, the debt to GDP of the G7 nations was averaging 45%. Now, the same G7 nations, it is 125% debt to GDP. Surely the bond yields are going to rise due to the greater risk. What's your thoughts?
I'd like to check the numbers, because I think the debt to GDP of the G7 is far higher than 125%. In the US is at 130, and we issued the reserve currency for the world. And I mean, go back 50 years. 50 years ago, any nation that got to 100% debt to GDP, they were stepping through the threshold into Banana Republic land at 100% debt to GDP. I think Japan is what, 300+%?
Yeah, they are monstrous.
I think that number of 125 is way low. I'm thinking it's pushing 200 or through 200 if you average all the G7 nations. And you sound like me over the last 5 or 10 years. I've talked about this, and nobody really cares about it. That if we're running a deficit, if you run a deficit of 5% a year, a budget deficit means the government's spending 5% more than what it's taking in. That money gets spent. When that money gets spent, it becomes part of GDP. What happens if that money was not spent? If it was not borrowed and it was not spent, then that particular year would go down as a recession. I mean, if you've got 2% growth or 3% growth, but yet 5% of the growth came from borrowed funds, without those borrowed funds, it's a negative year. And there's only been 1 year, 1997, and that was done with smoke and mirrors, that the United States actually had a surplus. I think it was $20 or $30 billion. But since 1960, pretty much every single year has been a deficit. If you strip away those deficits, yes, you can see growth because you can see them building things. You can see people employed to build those things. But what they've done is they've built and nurtured a debt bomb that's going to explode. And when it explodes, anybody who's in the system and has done what they've been told to do, go to work, save 10%, put it in the bank, save another 5% or 10%, whatever, put it in your retirement account. Those are paper assets. The vast majority, 97, 8, 9% of the people out there don't invest in gold or silver. They invest in paper assets. And if you have a meltdown, the problem is the institutions themselves are going to go out of business. And Australia is part of the West. And the West has written laws, and they're all on the books now since 2014, that when an institution goes down, it can take its customers' money to save themselves. This is the great taking by David Rogers Webb. If you put money into a bank, you are no longer a depositor. You're considered a lender. If you put money into a brokerage house and you buy stock, that is not legally your stock. It's legally the broker's stock for your benefit. So when this thing goes down, people are going to find out that their institutions saved themselves with customer money. And it's totally legal. It's immoral. It's not right. It's a bad law, but that's the law. So, people need to think about that. You want as few intermediaries between you and your money, because when things go bad, your money's going to be pulled right out from under you.